Hi there, in this video we are going to look at Algorand, and we are going to take a look at where the bulls and bears are battling around, whether there are any traps for you, and then also whether there are any whales footprint through the Wyckoff lens, and these are education content only, not financial advice. So let's start with the daily chart and see what's going on with Algorand. Here, this week, in particular, Thursday and Friday, these two candles over here, the white candles, basically the trading range has been expanded. The direction remain unchanged. So what we need to do is to expand the channel box. So this is kind of an expected move, because if you look at this, this is the leg that should have drawn this channel box, at a wider width. But because during the period between mid-April all the way to early May, those peaks weren't able to pass through this particular line. So that's why we temporarily draw the ceiling over there. But if we expand, then we'll know and see immediately. Everything makes sense. So let's do this. Expand it further. All right, so now we have these lows hitting the bottom, these highs hitting the ceiling, and then time to move the center line as well. And amazingly, okay, let's just make sure the lines are parallel. These two peaks and the current bounce, okay, just today, you see the wick, right? Just touches the center line. So the methodology still works over here. So sometimes we have to adjust when the initial trading period, remember this is a short-term trend. So there are a lot of adjustments we have to make along the way. We can't let it stay static. Okay, we have to adjust when the situation changes. And not only that, if we look at the volume, it has been increased basically above average for the past week. So that's a positive sign for Algorand, at least for short term, okay? So after adjusting the box, obviously we have to look at the dates. Haven't really changed for the bottom, for the support line, because it's still these two lows that help us draw on the support. And then how about the current trend, right? If the price continue to trade along the stronger half of the box, let's see whether it can stay above the 13 cents 60. Okay, currently it gets rejection from over there. Okay, you see rejected from the ceiling and then also rejected from this key level, the light blue key level. It's a normal behavior if it travels and to the bottom and then bounce up again. Remember, I use this metaphor, right? It's like the air hockey table. The puck basically bounces between the top and the bottom. This is exactly what's going on. So there are two scenarios within this uptrend base case, okay? Either it bounces along the stronger half, or it comes down and then tests the support and comes back up again. But whenever it comes close to the center line, just like what is happening over here, it's very common you see these kind of support or rejection, like the previous period back in mid-April and late April. So that's the, bulls and bears battle zone, and then also the key levels. There's no immediate bulls or bear trap. Here, it was almost a bull trap, but the rejection was like same day, and we already know it's not going to happen. Likewise for the day after. Just that the volume has become lower for the past 2 days. May it be weekend or just no commitment from the bulls and bears, because the big guys are waiting for all these economic numbers that's going to come out this week from the US. So that's going to drive the other round of movements. And in terms of the big picture through the Wyckoff lens, whether there are any whales footprint, Currently, we are seeing this uptrend that's still going on. Okay, you see this line over here that's supporting the upward movement. We're tracing that in the daily chart, so that channel is the line, same as the line that I've just drawn on the weekly. What's happening right now is that after this deep test, okay, similar to what happened back in 2003, 2004, the price is slowly returning to test the light blue key level of 13 cents 60. Okay, you see this peak over here. That's the beginning of the year. Okay, it is now coming back to retest this point, and that also happened in these previous accumulation cycles. So let's see whether it can pass through this line. If it can and stays above setting a sideways movement, the probability of it coming back to retest the purple or even higher becomes clearer. So what we want to see before the next FOMO period comes in is for the price to come back to test the higher blue levels. That means 24 cents. That's where the automatic rally peak was around. And the 26 cents 40, the deeper or darker blue line, that's also where the automatic rally kind of got close to. Okay, the automatic rally closed at 24 cents, but at 2 points, those 2 weeks, it went almost touching the blue line above. So that's where we want to see the sign of strength. So this SOS, we want it to appear again, so we know, okay, the market is returning. And remember, even though SOS happened, it can still come back to the lower levels for further check out, the whales that are going to check out the paper hands. Okay, the whales can do whatever they want because they have the capital and they have the tools and skills. All right, that's for Algorand. Remember, you can find me on Substack at SLNs. Thank you. See you in the next video.